Okay, good morning, everyone. Get going here. All right, U.S. markets, reasonably strong session for most of the day yesterday. I say reasonably strong. We're up over 1% for a good part of the day, most of the morning. We kind of faded into the back half of the day, but we were led by with a risk-on market. I mean, you can see that the only two sectors that were down on the day were the defensives, telecoms, and utilities. So, I think it was considerably a good start to the third quarter, considering the previous few days of run-up that we've had. We pretty much had stocks that were trading higher across the board in Europe as well, and I think it was especially important the way that we saw commodity prices rally yesterday on the following the PMI numbers out of China and the slightly disappointing PMI numbers out of China. So after kind of seeing that, makes me think to an extent that that all the negativity there may be priced in. I mean, we pretty much saw a rally across the board there in the commodity space. The shares also started to catch a bid, and something that we just haven't seen in a long, long time. So I think it was a really important day. We also had a solid ISM survey out of the U.S. yesterday, but the data has been coming in mostly in line to slightly better in the States, and we'll have to keep an eye on that going forward. You can see Asia was green for the most part across the board. We had Australia, which was particularly up a lot, over 2.2%. We also had Japan that was up quite nicely as well, with the yen approaching 100 to 1 again. And like I said earlier, resource counters really driving the gains in Australia as well as yesterday and in Europe and in the States. So there's something interesting as well that the Australian Central Bank came out and said yesterday, saying that it may provide some scope for further easing with the current inflation outlook, and that should that be required, it could be required to support demand. So I think that also is a reason why Australia caught such a nice boost there. The Hong Kong market resumed trading today after a holiday yesterday, and I think if I'm not mistaken, China was one of the only markets in Asia that was down today. So still a little bit shaky in the China region. There's no corporate action today. And very light on the data front as well. Like I said, we had Australian Central Bank that announced rates today stayed in line, but they were a bit dovish. We have Spanish unemployment later. We've got UK PMI construction, and then we've got factory orders out of the US at 4 o'clock. So very light on the data front today. Almost no, there's no corporate action whatsoever. So very important. One thing I would make a note of is that there's some good commentary overnight from some of the mining discussions here locally, and pointing out some of the obvious things, and also making note that the unions are being totally unrealistic with their wage demands, because over 50% of the mining operations in South Africa at the moment are loss making. So I think that was some good progress there, and we'll monitor that going forward, because it could ignite a little bit of a rally here locally. All right, let's jump into the maps. Okay, the first thing I want to have a look at is copper. We talked about this yesterday. I'm kind of looking at this level here. We had a little bit of consolidation and a bit of maybe a little narrowing wedge that we just snapped out of yesterday. You can see that move that we had yesterday, which is quite violent to the upside there. Really important, I think, that we regain that level. Like I said earlier, it's really important that we manage to rally, and the entire commodity space managed to rally yesterday, even with negative news on the PMI front out of China. So, to me, that's actually something that we're going to need to really pay attention to and take cognizance of, because I think it could be a bit of a turning point in terms of the commodity space. Mentally, my mind's kind of shifted a little bit in terms of my thinking right now, just because of that. And I know that also we reached a lot of our downside downside targets in a lot of these commodity stocks. So I really think that some of them could be, obviously they caught some bounces yesterday. I really think that they could be due for a little bit more of a bounce, and we could get a little bit of outperformance for once in that sector, which we haven't seen in probably a year and a half. All right, let's look at the gold price. Look at spot gold. I'm actually going to go into a 30-day on that so that you can see a little bit better. What we want to look at here is really where we broke down from, which was right at call it 1273, 1274, somewhere in that neighborhood. That's when we broke down on the gold price. Let's make it a nice round number and call it 1275. But I think that's going to be our first level of resistance on this bounce in the gold price. I think really important that we finally managed to get a little bit of a bounce. Hopefully get our shares up again so that we can eventually sell them. But the next little level of resistance would be where we broke down from. Let's go back a little bit longer here. The next little level of resistance will really be up here where we broke down below at about 1350. 1350 to call it. To 1370, somewhere in that range is going to be our next level of resistance if we manage to get through 1275. So, like I said, if we can get above this level, 1275, I think we could trade all the way up here to kind of somewhere between 1350 and 1360. You can't see some of the resistance going out to the left here because it's too short. All right. Let's look at First Rand. I know, these banks have had a nice hard bounce. We did see some real weakness creep into these things at the end of the day yesterday. Some good size selling that came in. I think that this level here around 30, it's the 29.95, 30, somewhere in there, is going to be some sort of formidable resistance. Going into the next couple sessions if we're able to get up there. So just keep that in mind. I just wanted to point that out that in my mind, the first test of that level, you gotta think that 5-6 sessions ago we were at 27 Rand. We may fail the first test of this level at 30, and so just watch out for that if we get up there the next day or two. Breweries. A lot of guys talking about breweries yesterday, wanting to have a look at a nibble in breweries, and I just wanted to go through it and look at it again. We had a long discussion about this kind of thing yesterday, and talked about how why are we trying to buy things as they're falling rather than waiting for strength to buy into them. And I really feel like unless this thing can get above 14.95, we're kind of in no man's land at the moment. I'd rather buy it on a breakout here above 14.94, 14.95, or maybe buy it back down on support closer to 450 or 460, somewhere in that neighborhood. So, or even recent lows, maybe around 470. So I'd maybe wait if you guys are looking to enter here to see us at least get down to these recent lows at around 470, possibly even down to 460, or a breakout to above 494. So, just keep those kind of things in mind when you're looking for your entries. All right, I'll shorten this up a little bit. And Impalas, like I said yesterday, we got some like I said earlier, we got some nice bounces out of some of the commodity prices yesterday. Really pretty disappointing actually out of this thing, but we do have resistance, and we traded up against that resistance. You can see we wicked up against that yesterday at 96. That's quite formidable resistance. You can see here how we broke through that. If we can get above 96, then I think this thing's got some room to run. And like I said, same sort of thing. That's, to me, is probably the area where you're going to want to look to enter, even though it's already bounced 10%. I wouldn't buy it unless it maybe got over this level, because for me, you can look at this, it's quite obvious. We're still in a bit of a downtrend here, to say the least, and I think rallies are to be sold there. So to me, 96 is to be sold unless we can kind of break up through it. Bounces are to be sold to me in Impalas. All right, let's look at Bidvest real quick. I just wanted to show this one. We kind of right at we came up yesterday when we tested resistance. We actually got through it nicely for a little bit above 250. 248 is the level that we're looking at here. If we and I think if we fail to get above 248 and we kind of spend some time up here in the next few sessions, this thing could be looking a little bit head and shoulder-ish. You can kind of see how that could possibly be developing. If we just spend a little bit more time here and go out to the right over a few more sessions, we could get quite head and shoulder-ish here on BidVest. So I think if 248 doesn't give way to the upside over the next few sessions, and I think it could be to be sold. So watch that level closely over the next few sessions. Investec, INL. I know there's two listings of this thing, but let's just have a look at the INL. Yesterday, nice breakout here in Investec. That is perfect of a descending trend line there as you can ever get. I mean, it touches about 12 times on that line. We got a nice breakout yesterday, very definitive. So I would say that we could trade up maybe to this little intermittent top here, maybe close to 70 Rand, which leaves us about 4.5 Rand on the upside here. This is kind of a little bit of a longer term flag pattern here, but I do like the pattern, and I really think that this thing could potentially trade up to its recent highs at some point. All right, and then the last one that I want to show here is British American Tobacco on the LSE. I'll just pop forward just a little bit here, just so that you can get a good idea of this level that I'm talking about, and you can really see from right there, it's just north of 34.50, call it 34.55, 34.60, somewhere in there. You can really see there's a very, very clear resistance. And like I said yesterday, we closed just below it, about 10p below it. And we get above this level here, I think you got to be on this trade. This thing, if you go back and look, let's just have a quick look here at the 10-year chart. I was looking at this last night. It's hilarious. Just goes, it's the most consistent stock ever. It is, it hasn't dropped its trend line since 2009. We came down, we tested that trend line a couple sessions ago. I think if we get above 34.55 and can hold on British American Tobacco, then I think you got to get on the long side of this thing. Like I said, it hasn't broken its trend line in ages, and it's just so consistent. And that's it for today, guys. Sorry. Let's just throw one more thing out there. We have a question from Ricky Tet, and about I just posted it right there. This morning, gold rallied aggressively with the introduction of QE, with the same monetary injections in place. This calendar year, we have seen the gold price collapse despite a continued stream of negative data, like the latest GDP figure out of the U.S. What would we need to see the gold price recover its losses? I think the only way, Ricky, will ever see gold price recover losses anytime soon is if we get hyperinflation, because they've thrown the kitchen sink at it, and this thing is literally just cratered. I think the real challenge that you've got is you've got interest rates rising, starting to rise now globally, especially obviously in the U.S., which makes the cost of holding gold extremely high. Gold is a zero yield asset, and guys are, they're not gonna sit in gold if they can catch some money out of yield, and so that's the real problem that gold has going for it. If we do start to get really hot inflation numbers, I think gold will really heat up and could potentially take out previous highs if that were to happen. But if that doesn't happen, I really don't see it. I don't see that kind of a bounce actually coming anytime in the near future. And that's it for today, guys. We've got one more Skype question here from Doug. I'll just post it up here real quickly. You can see Doug saying, let's see. Okay. Doug, I want to go long Tiger Brands if it breaks through 315. Obviously, it runs a bit, but is it worth the breakout? Okay, let's try to answer that one real quick. Tiger Brands. I'll have a quick look. Yeah, Tiger Brands probably should have showed this chart this morning. You can see there we are right at resistance. We kind of tested it yesterday on the wicks. I'm drawing this from the close. that from closes. Yeah, I mean, it's actually quite a good looking chart here. Above 308, really looks like potentially we could get a nice little breakout here. Probably one that I should have been having a bit of a look at this morning, but nice little formation here. We've kind of got a bit of a narrowing channel that's been happening in this for the past year. Let me actually back it up a little bit more. Just it looks so this does look quite enticing. I think if we it's actually a great one to point out. If we get above 308 on a closing basis, I would say that Tiger Brands could be owned and could have quite significant upside here. So good question, Doug. That's it for today, guys. Thanks.